Welcome, Michael. How's it going? What a live stream. Whoo!
Can you guys hear me?
We can hear you, buddy.
Good
And
morning.
thank
How's
you. I
everybody
mean,
doing?
we weren't going to go on. We realized that you were going to be busy and you had appointments, and then that that
Yeah,
happened.
missed it. I missed.
Yeah.
See, folks, I missed. Sometimes I miss.
Well, we appreciate. I mean, you missed it, so we're here now. So that's cool. Great calls. I mean, beautiful calls from the live stream today.
Yeah, very nice.
Absolutely gorgeous.
Well, I'm glad it was able to be shared with you today, and hopefully it was encouraging to all of you seeing how the science I teach you works in real time as well.
Yeah, I mean today textbook, anything and everything that you teach that we would look for. I mean, the way you could I mean the PD array matrix as you define it and where and how we are constantly shuffling from what's important at what price arrays within which raise and within the day. So today was a very nice classic example where we pivoted off of two previous days highs. And now it looks like we're coming back to a previous day's low. And like with all of the things that you teach, Michael, I mean, you've had lecture series where you've really tried to simplify everything that you do in folks looking at the previous day's highs and lows.
Sounds good, man. Sign me up.
I just want to say something real quick. This was so good that I'm gonna order 12 laptops right now.
Yeah, man.
I need it.
It's fun. It's fun when you can really appreciate. There's no way around it, and it's not. We're not bragging here, folks. But when it's so obvious like this, it's like it leaves no room for them to go. They can't run. They can't hide. They have to chew on it and say, you know what? There's probably something to this. And I don't have to like the guy, but let me just investigate this stuff and see if it can happen in my own hands. And that's what I'm looking for everybody to do.
And doing it in paper and learning and being in a lab and being okay with understanding that it's a lab that there is no shame in trading paper and learning how to trade without damaging yourself.
It's real
Today's a
important.
great example, and the more that you can do this for yourself live is when and how you convince yourself that you know how to do this. That's the confidence. Those are the gems, not blowing up. Too many people are so focused on blowing up, right, Michael? I mean, that's
Exactly.
what ends up happening is you're engaged, you're nervous, you don't know what to do, and you just literally blow up. You just like pop like a pimple and you don't know how to engage with any of these thoughts or these feelings. But what Michael is trying to do is show you very scientifically, very in a way in which it's repetitious for you, the trader, you, the analysis, to put these prices on your chart for you to look for, or these boxes or these quadrants or these octants. You put them all on your chart, and then you get to make critical decisions based on what you're learning. And today, I mean, if you really understand what Michael has taught throughout his compendium, and if you have the specific arrays that he's taught, today was very, very clear and a very, very good example for someone to do quite a bit with their, even if it is a paper account, you could do quite a bit in proving to yourself that these concepts work. On a day that's less probable, on a day that most folks are spinning their thumbs, you could be applying the laboratory of trading in lab and seeing where and how price is moving based on these concepts. So, Michael, masterclass today. I just can't reiterate that enough.
Appreciate that, man. Appreciate it. I'd love to hear everybody else's feedback on
Yes,
what
absolutely,
they got from it.
absolutely. Market Oracle has a really nice a thought or take. We'll bring up N Trading SMT. We'll bring up, if you have not been up to Trader Roundup, feel free to ask for the mic. We're going to bring up some new folks. We're trying, guys. So, and then we have some folks that have been here that demonstrate very clearly that they know how to follow the assignment. So we're looking for that as well. Market Oracle, you're first. Dr. Tony's in the house. Nice to see you. We got N Trades here, N Trading coming up. So start with Market Oracle, buddy. How you doing?
What's up?
What's up?
How are you doing, brother?
Very well, thank you, thank you.
So, as a recap of the stream that Michael just ended, it was a masterclass in how to manage your expectations and how you do the tape reading. So, one of the things that stick with me is when Michael was talking about when you see an accident, and there are things when that stand out to you, and there are people who can see through it, just like when Phil is manipulating the markets. So you have to stick with the price action on that time as well. You don't have to trade live or demo, but the thing that came immediately to my mind was, have you seen the clip of Dana White during the White House correspondent dinner shooting? And he was like enjoying every bit of it, no matter what is going on outside. And he was like, okay, this is so good. Let me enjoy every moment of it. I don't want to miss any moment of it. So this is what you have to have an attitude when the markets are not as per your liking, or it is doing a different thing, because that's a lot of learning opportunity for you right there. Just like in the beginning of the price action today, where the market was going 50-50, and then Michael reiterated the exact things what it needed to do and what his expectations were. And one of these 16 laptops of your Michael, they did exactly what you said it was gonna do. So kudos to that.
Beautiful market. Beautiful market oracle. We want to get more feedback, more conversation from you, Dr. Tony. Full circle. Welcome back, Trader Roundup, buddy. How you doing?
Hey, I'm doing great, guys. Tony Ratliff from Indiana. Been trading ICT for about 4 years, and I still struggle. But I just wanted to tell Michael that today was awesome. It was what I needed to hear. I loved the commentary and him keeping calm. The one thing I found out that when I start cussing at the screen and yelling, I should just stop trading, because yesterday I was trying to long that market and it just kept going down, and I started getting pissed off and cussing, and I'm like, Tony, you just got to stop trading. So, Michael, I appreciated all that you were sharing today. It really hit home with me, and I'm sure it hit home with a lot of other people. Thank you.
Appreciate that, man. Thank you.
Yeah, good feedback. Good feedback. AM, you're up next, buddy. If you have any questions or anything as you guys are here, we like the feedback, obviously. If you have any questions as well, it's good for a good opportunity for that. AM, you're up next. I'm going to mute your tone. Go ahead, AM.
Hello. Yeah, it's been a while since I've been here, so I'll give a quick introduction. My name
Pretty
is
please.
Huddleston. I'm from Los Angeles. I've been trading ICT for going about 3 years now. My preferred model is like market maker model. I just see it in everything. I think every other encompass and model kind of presents itself inside that framework. So that's kind of the way I use it, as a framework, a guide in price action and trading. Honestly, today's lecture was pretty fascinating. I haven't been on the markets for around 2 weeks now, 3 weeks. I've been on a little break. And coming back, I always remember the FOMC days were kind of that day where nothing goes to plan and everything is always a little bit difficult and back and forth. And being a part of Michael's lecture today kind of helped show that and remind myself of what it's like. To anybody new, it's just not a daily trade. Just skip it. You don't need to trade every day, honestly. I learned that one the hard way when I first started. I do have a question though for Michael. Um, while I was gone, I was listening to a lot of X Spaces, and when you mention your grid lines for price, you taught us gradient levels. These are horizontal grid lines, and a grid not only has horizontal grid lines but vertical grid lines. You mentioned that the vertical grid lines are time. What I referenced by that was session times, kill zone times, macro times. However, um, I was kind of curious on if those vertical lines may not only refer to or may not refer to those macro times or kill zone times, but may refer to maybe your logo or any other Fibonacci sequence or anything like that.
There are things in time that I was very honest and told you all as a community that I would not divulge all of that stuff. But if you just stick to the macro times and the session opens and in the lunch hour delineations, they will be enough to serve you. But yes, there's other things that I won't teach that I use when it comes to time.
Okay. And then I'm assuming you don't have to say, but is it your logo, or if I can pry a little bit more out of you?
It has something to do with it.
All right, thank
Gotta
you.
love it. Gotta
That's
love
what
it.
we're here.
Hey, I really appreciate I mean our time warriors when they come up and they're looking for the keys to unlock time. I mean, we've had quite a few time warriors here in the Trader Roundup space. I would even argue most of the folks here, time is one of their primary emphases. And I think that's a great thing. So as traders, as ICT based traders, that emphasis on time is a great thing. And I think it's something that you could and should constantly explore with where and how your model is actuating in the market.
If I can be uh, somewhat assertive on this topic at the moment, I want you to think about what I was showcasing today over live price action. I don't know how many people were watching, but I'm sure there's at least 10. So if we're looking at price action and everything I talked about had zero reference to time, all we were looking at was this price action and liquidity. So if you got to the skill set level of being able to do what was shown today, staying with one side of the marketplace, not being lulled into wanting to go short, and focusing on the things that I highlighted, and that's all you were ever able to accomplish, not requiring any element of time, except for it's the time of day where this type of thing can form, but no real specific or scientific, hierarchy beyond that. Would that be failure, or would you not be satisfied with something like just like today? Like I have students that sometimes they cuss me out in emails. They say I'm a fraud because I won't teach that part. That doesn't make a fraud. It makes someone that says, I told you in the beginning, I'm not going to teach you everything. And that's the line. I'm not going to cross that line. And I understand and I appreciate the enthusiasm. It keeps coming up, but I'm not going to breach that line. I'm not going to change it. I'm not going to go beyond it. I'm not going to tip my toe over the water a little bit and say, okay, I'll give you a little bit more. I'm not going to do that. And I don't want you to be mad at me because I've been honest and told you I wasn't going to teach all that. But what I have taught is light years, no pun intended, above everything else out there. And you don't need everything that I'm not willing to teach you because I have you in the same place where a lot of those things are going to do it anyway, but you're not worrying about the aspect of time. You're just looking at what is price doing when it should move. And do these PD arrays support that logic? Because that's what this language has afforded you, a way of understanding things that I am not going to teach entirely. You don't have to know why the things are performing exactly as they are in the chart. Think about it. What's actually occurring in price action, because it ain't buying and selling pressure. Why is it that these inefficiencies are my PD arrays? Why is it behaving in a way where when it's bullish, it stays in the upper half and doesn't allow a body in the lower half? You don't need to know what that is. You just need to know that that's what you look for, right? It's equivalent to my wife. She doesn't know how that engine starts up in her car. She just knows when she gets in, she pushes the button, it should start up. If it doesn't, she texts me and says, can I use another car? That's the extent of her concern. You are doing the same thing in price action. Is the price telling you that you should expect it to continue going in one direction? And as long as it's doing that, you don't have to complicate anything. What I showed today is how simple it can be when you allow it to be. When you start heaping on all these extra things, can you manage all that extra information? Because the things I have to deal with time, many of you would choke on it because it's a lot. It is a lot. And many of you think that if you had it, it would help you. You would go crazy with it because I was on the edge of that. So just know that it's not necessary. And I wish people would backpedal away from that topic because I'm never going to cross it and I'm never going to give you what you're asking for when it comes to that.
And I mean, and to Michael's point, we have more than enough. More than enough. So keeping it going, Gray Eagle, you're up next.
Okay, thank you very much. Can you hear me?
Yes, sir. We can hear you.
Okay, first time up. I just got my Medicare card, so I'm 65 years old. I've been trading for almost 45 years on and off. And what I mean by on and off is on profitable at times, off lost. Gave it up a number of years ago. My best run, which is true, and I'm sharing it because it makes me a little crazy. I was trading some options, long story short, 10 or 15 years ago, and turned 5,000 into 1.1 million in about 5 months, and then literally lost it all. I was smart enough not to keep going. So that gives you some background.
Wow.
I mean, it's insane. And but
thanks for telling us that. I mean, that's a lot of experience in the market. I mean, there's a lot there.
Just not very smart experience.
I didn't say that. We don't have to. We both know experience does not mean wisdom or smart. It just means experience.
Exactly.
It means our ass has been fucking handed to us, right? I mean,
exactly.
So I know I appreciate that, brother. I appreciate you coming up and saying that. So I appreciate the context. How do you engage with price per se?
I engage in price with fair value gap, primarily first presented fair value gap. I found Michael in January 25. I started with 2024 and literally obsessed through it, taking notes, time markers, while keeping up with 25 and 26. And then this January, I finished. I went all the way back through 2024, took notes again on a computer thinking, hey, I'm going to want to search for this. So, of course, I love to listen to Pip Munch because she's precise. And when I did it the second time, my notes literally tripled. I was astonished. But I'm not a social media guy. I'm not trying to build anything. I don't understand why people can't see how obvious the genius of Michael is. I mean, the perfection is unreal. So maybe that's just my age. But I would encourage everybody to just focus in on it because it's incredible. So I'll comment on today. Today was extremely helpful for this reason. But in February, I had 8 days in a row of profit. Demo trading, still demo, and I did everything Michael suggested. Back testing is to the best of my ability, and finally had 8 days profit. Thinking, hey, I'm there, and knowing on that Friday, wait a second, be careful, you've been here before, watch the overconfidence. And no kidding, for the next 10 days, I was red. And on that Friday, I pounded my desk. I have glass on my desk. I can't believe I didn't break it, but I was so frustrated because I didn't know what I'd done. So Saturday, wake up, and I just couldn't figure it out. Friday, Saturday, wake up, get on my knees and say, okay, what have I done? And I prayed, and I got this clear message, FOMO. And what I was doing was when everything was chopping, and then there was one move out of 10, I was in all 9 of those until the 10th move, chopping, getting cut up, trying to catch that one. And I thought, hey, that was a great epiphany. Well, today, Michael's walking and talking through that trade was so helpful because this last week's been frustrating like it has for a lot of people. But to hear him step by step when I'm in there, and I did a demo on my first presented fair value gap because I've learned that if I'm just watching, I don't get the emotion and the energy and the anxiety and the overthinking. So I'm always doing demo. And today when he was, and I didn't pick up the stream till after I was in, of course, but to hear him talk through the different ideas of watch for this, and this is the rock climber, which I haven't understood as well until today, and look for this, and here's the rejection block. It was incredible because for me it was so helpful to basically be walked through a trade. And I know I've watched a lot of his lives, but at the time it wasn't me looking back. It was during the market. It was fantastic, and to hear his calm was amazing. And the other thing that struck me is I've noticed recently how long he's in these trades. Sometimes he's in them. Today was 47 minutes, and it was just hugely helpful. So I do have a question, and maybe it'll tie into today. But when you've taught about, Michael, you've taught about when we're trading near all-time highs, don't guess the high, don't just assume it's going to turn. And I grabbed that and did well with that demo, a few months ago when we were up there. Recently, when we've had trades where we're trading near all-time highs, but we have a premium opening range gap, which sort of indicates an initial first hour anyway bias of short. At what point does it make sense to say, hey, you got to abandon the short thinking if it doesn't get to the consequent encroachment, or that's not going to apply because we're near all-time highs? Is there a point that you can explain it? And you can tell from my question, it's not even clear in my mind. Where is it, or when is it appropriate to sort of say, okay, I came in with the 1 hour bias short, but man, abandon that. It looks like market's going long. Could you talk to that?
The clue is number one, that if it's gapping higher and you're near all-time highs, when do I abandon the pursuit of expecting it to trade softer or pull back in? By what it does at that quadrant level. So if we have a gap higher of 200 handles and the upper quadrant gets traded to, and it flirts with it just below that, but then says, I'm not going to go any lower, then I would be more inclined to trust that it's going to be gap and go. It's going to continuously go. I've been very apprehensive because of the all-time highs we're at right now, because I think they're artificial. There's so much being baked in. It's basically bullshit. And I don't want to be caught offside, because I think we might see a day where this thing has an aggressive sell-off, and I don't want to be caught offside with something like that. I don't want to entice all of you to be in that. I look for the large gap opening in the upper quadrant when it's a bullish candle or a bullish gap. That's like the trigger. It tells me, because if it's really wanting to go lower and be heavy, it'll smash through that upper quadrant level and just cut right through it. It won't even mess around with it. But if it starts showing interest around that, it's kind of like saying, look, I got into the gap, but don't expect any more, and then expect to go, continuously go higher. If we weren't in this geopolitical horse shit that's going on right now, and we were just a traditional all-time high, I'd be every single day looking for reasons to keep going long. But because of the bullshit that's in the market right now, I'm okay with, and you've seen examples of it, where I'll take shorts. I'll look for shorts, because I think that while I could get stopped out, I don't think we're in a market where it's going to have 1,000-point gap up intraday because of some good news. There ain't enough good news to cause that. So it's more likely that there'll be bad news. And if I'm short, I could catch a tiger by the tail by not trying to chase all-time highs. So I'm not sure if I was able to answer your question, but that's what I'm wrestling with right now because of the geopolitical climate that we're in.
Okay. Yeah, you did answer my question. Thank you. That's clear. I recognize that it's it's not a no-brainer decision, and I'm hearing your voice in my head more and more these days. So and that's a welcome thing, by the way. I appreciate it. Okay. My final question is this, if I could.
Sure.
I struggle with the entries and the macro, and I've gone back and forth on discipline. I'm only going to enter in the macro, or I'm only going to enter when there's a PD array formed in the macro. And when I watch your trades, honestly, sometimes I get so frustrated because it looks so obvious when you do it and you teach it. And then I look at it and go, man, I'm obsessively. I mean, I'm telling you, I'm nights and weekends, 4 to 8 hours a day on the weekends, 2 to 4 hours at night. I mean, I'm not kidding. It's intense because I'm sort of OCD in that way. But when I see it and I'm not there yet, it's very frustrating. And I've heard a lot of other people share that. In terms of the entry relative to the macro, am I overthinking it by thinking I should either enter only in a macro or enter only when PD arrays form in a macro? Because I see a lot of your trades entered outside of the macro. Could you comment to that?
If you stick to these rules, it'll do better for you than if you didn't. The macro times are like key injections of volatility that are directionally derived. It means if there's going to be a directional run, they're going to many times start or originate just after that. So try not to predict the move or be positioned ahead of the macro. I have done some of that in this economic climate, and sometimes I've had to suffer through a little bit of drawdown. It went because of my experience sometimes in my favor, but other times it stopped me out. So don't try to trade ahead of the macro time. Trade either during the macro time or just after it, as long as you're in close proximity to what starts that trade. So if the inception of the price run is going to go higher and you didn't participate during the macro time to get in at the ideal time, but you're in close proximity to it just after the macro time ended, and there's a PD array that supports what you're expecting to see happen, don't be afraid to take that. There's nothing inherently wrong with that at all. But what I've done, I've taken more drawdown than I should have because I'm trying to outsmart the marketplace because of the bullshit that's going on. predicting what I think should happen in price action and trading ahead of the macro, and it's not giving me the benefit that I would expect by having greater smarts or experience, actually suffering through more drawdown, or the market's just sitting there stagnant. And then after the macro does what it normally does, then it runs. So I'm putting myself through unnecessary frustration. So that's the response to your question in regards to the macro and whatnot.
Okay, hugely helpful. Okay, thank you. I'll just close by saying, Kitt, thank you very much. When you first started referring me back to core content, I was thinking, man, I've been doing this for almost a year and a half, 4 hours and 2 hours a session. I'll never be able to do it. And I finally just heard your persuasion enough to sort of go back. And I appreciate the fact that you're an encyclopedia and all this. So thank you very much. I appreciate this. And thanks for allowing me to ask the questions. I'm very grateful for you, Kitt, and for you, Michael. You're a gift to us all. Thank you.
Thank you, brother. Thank you for sharing the time.
Yeah, my man Gray Eagle coming up. Really enjoyed. You got to follow out of me, Gray Eagle. I'll be in your DMs. I'm excited to jump into the we'll jump on the chart and take a look at some things and see if we can't delve into some of these concepts. I mean, you really just want to model. I love your question on macros. I can tell you this, and I just want to add, as a student, when you backtest, when you look for ways to increase your Sharpe ratio, your win rate, your expectancy, these very specific analytics that over time become more and more important. I'm someone who's done that a lot, and I'm here to tell you, I got the data. I don't fuck around in the market if it ain't a macro. I win way more if I'm trading in a macro. If I'm trying to fuck around outside of a macro, then my expectancy goes down and my rim weight goes down. So I'm telling you from experience, as someone who is, as a student, my analytics, my statistics go down when I'm not operating in a macro. So take that for what it's worth. You've got data to collect and you've got ways in which to find your trade. But I'm just giving you my thoughts and 2 cents on that.
No, I appreciate that. It's funny. I have a spreadsheet that I keep track of, and long story short, I'll be quick. I put it into ChatGPT to analyze what am I doing right, what am I doing well, et cetera. And it came back and said, hey, when you're in premium or discount, you're doing that right, and when you're in the macro, your results are better. So that's why I wanted to ask Michael, because I see a lot of his trades.
Yeah. I mean, data, you can prove to yourself within data and the execution of your models of the things that you're looking for. You can substantiate, which is what Michael has asked you to do. And within here in Trader Roundup, he says very clearly the 50-10s are his macros. Everything else is bullshit. Yeah, you can find whatever you want, but he said it very clearly. Those are his macros, and that's what we trade. And there's an evolution in which those macros were presented to the community. And I go back to that original sequence. And I mean, as someone who's been studying Michael as long as I have, we're going back to literally the forum days and back to, students communicating and talking with themselves on what might be these ranges. So when Michael clears things up as he has, and he explains to all of us what the 50-10 is, in my opinion, all you got to do is go chase down the data, chase down the arrays, and look in where and how you can frame your model within that context.
Yeah, that makes sense. I'll close with a laugh. Gray Eagle is support of Michael because eagles soar like an eagle, and of course, being gray hair. So that's about as much social media as I've done, and even this is a little outside of my box. But thank you all. I appreciate the help and support.
You're quite welcome, brother.
Yeah, high five, Gray Eagle. Love the comments. Love the conversation, man.
I followed him as well.
Yeah, I mean, that's really good. I'm excited to, like I said, jump into some DMs and have a little bit more thoughtful conversation with Gray Eagle one-on-one. So that's coming, mate. So
great, thank you.
Yeah, let's see. Who else do we got here? Misael. I love the name. We'll bring him up. He's been here before. Carrie got some comments. We got Carrie and Misael here. 1109. Oh, look at that. Shocked. Price did what Price likes to do in a macro. I'm shocked. Anyway, next we said Misael, you're up, and then we got Carrie.
Hello, Kitt.
Does anybody else hear anything? Because I got nothing.
I don't hear anything.
Nah, he was on for like a whole half second and then he jumped off. Are you there, buddy?
Hello, can you hear me?
Yeah, we can hear you now, Carrie.
Oh, I'm a bit nervous. It's my first time. So, yeah, hi, Michael. Hi, Pibunch. Hi, everybody.
Hi, buddy. Can you follow protocol? You know what that is, right?
Yeah.
All right, then let's do it.
So, yeah, I'm Gary. I'm from India. And professionally, I'm a lawyer. And I've been trading for the
High
past,
five.
I've been trading for the past 3 years. So, I've started with this candlestick pattern and all. So late 2023, I found ICT, and then I started with the 2022 model. So I'm also doing my practice. So I was not that consistent. Then by late 2024, beginning of 2025, like I locked in for a whole year. So, guys, can you hear me?
We can, Carrie. Go ahead.
Yes.
Yeah, so by 2025, I locked in, and then, for the whole year, I mean, till date, I never break my consistency. So, by the end of the year, I was doing the whole thing with the demo. So, by the whole year, by the end of 2025, I started to find my consistency with 2022 model. And then, last also I spoke with Kitt and he referred me to the core content month 1, 4, 8, and 12. And also I have done that. I have, written all the notes, note down all the things which are important for the day trading model. So I have found myself that within a short 1 year, with full consistency, didn't break any day. Like I literally cut off my practice, and then when this 2026 came, till February, I was really, having a good, year since last year. And then March and April, like I was struggling a lot. But then when I saw on, what I saw on X, Instagram and all, so many traders are saying, yeah, this is the, tough time. And then I heard it also from ICT because I never, missed his live stream. I'm always attending his live stream. So I really love his, drills, doing drills and then tape reading. The way he taught in tape reading, how to confirm whether this is the right FVG or the confirmation, and how it invalidates, how to validate. I mean, it really helps a lot because I am very impulsive. And last time when I spoke with Kitt and he told me, yeah, you are, doing very bad thing. You are trading, this even are there. And, like FOMC, sometimes I forgot things, but then when there are people to help, like I'm very grateful. And then yesterday also, I mean, I just want to mention, yesterday also, I think some people misunderstood me when I hit my trade yesterday, when ICT was calling that sell side, and then, initially I was about to go long because to buy sell stops, but then I refused. But then later when I sell, when it hits that, I mean, shit, man, ICT, he's really calling levels. And then I reposted, come on, man, it's random. But then some people, I think, misunderstood me because I want to say this because, people troll so many times that ICT
It's okay.
is random.
It's okay. It's okay. We know what you mean, and I understand some folks can do that. Did you have a specific question at all, Carrie? I mean, I saw some comments you had yesterday.
My question is, when there are, see, today we have smooth highs, okay? We have smooth highs, 27,251.5, and then 27,288 and a quarter. So yeah, price is very slow during morning, but what I experienced from last time, what ICT said then, before FOMC, like he don't always, say it's a good time to trade. But the levels like I committed because we are in a bullish order flow, but also it's a very tough price action. But then today I refuse to, trade my what to say funded or my real account. So what I did was the fair value gap, which formed right after the rate of sell side, and then following on to the macro, like we have one candle around uh, 950, yeah, 950 macros. What I want to ask a question is, like, if we have a relative equal highs after the torch on sell side, is it high probability to enter in the macro during the before FOMC event if there are smooth relative highs?
As long as you're trading in the first hour. After 10:30 Eastern time, you're entering where the lunch macro could occur, protraction sideways, this moving consolidation, not really wanting to do anything. That can happen. Erratic price action can happen. So I'm only telling you what I am comfortable doing as a trader. At 10:30, whatever I may have wanted to do, if I haven't done it, I'm not going to take it. But prior to that, pre-session between 7 o'clock and 9 o'clock in the morning Eastern time on FOMC days, they're very good. You can do a lot of stuff in that type of price action. But if it consolidates now, this is the part where you write the stuff down now. If
Okay.
7 to 9 o'clock in the morning Eastern time, if that's consolidating and it's not really making any kind of protracted runs higher or lower, it's just staying in a really defined range, like we kind of like saw this morning.
Yes,
That
yes.
is it's indicative of what we expected to see today. So if there's relative equal highs, it's like almost like a no-brainer. Just stick to that side and practice aiming for that, and you see the fruits of it today.
Yeah, it really helps a lot because what you said was if the price action is consolidation, yes, that really helps a lot because I never thought of that. I never thought of that. And also, I have one question. Like, is it okay to ask kids?
Sure, buddy. Absolutely. I mean, let's focus on the quality of our question, but pretty please continue, Carrie.
Yeah. So today, around 9:35, I regarded that as a discount week. Is
Do
it
you,
is it is it 9:35 candle?
do you have a
Because I
question,
entered.
Carrie? Do you have a question?
Yeah, my question is that candle is the right candle to regard it as
Carrie, what
a.
kind of questions are these, my friend? I love you, but come on now. What's your question, pretty please? I want Michael to be able to answer it, but you can't ask, well, is this question, I understand. I'm patiently going to ask Carrie, pretty please, do you have a question?
So actually, my question is already answered by Michael.
Okay, thank you so much. That's what I wanted to hear. Okay?
Yeah,
Thank you
yeah,
so much. I appreciate that,
yeah,
Carrie. We're going to continue the
yeah.
conversation. We're going to move on because we have a lot of people here. And I know you're nervous and you can ramble and you don't realize that you're just excited to be here. And high five. Thank you
And
for being here.
yeah,
I appreciate you. Thank you. Okay?
okay, kid. I
Awesome.
also forgot. I also forgot because I'm nervous. So yeah,
I,
my
I
mind.
understand. That's okay. I'm going to mute you, Carrie. We're going to continue the conversation. I understand that nervous energy is a thing. So I respect it. SHC, you're up
12:15
next.
is our extraction time. Okay.
Pardon me, sir?
12:15 is our hard extraction time.
All right, beautiful, beautiful. That gives us time. We got time, folks. If you have a question and you think this is a very good question, pretty please throw the question into the comment section, pretty please, so we can review the specific comments that are there and potentially pull you up with the question. Folks that are engaging with DMs and saying, bring me up, I have a question, and then you don't ask the question, there is 0 out of 0% chance that you demanding to come on stage is going to happen, okay? You need to provide and deposit what you would like to contribute to the conversation. Demanding on coming up with nothing of substance is not going to be in all of our best efforts. So I'm just reminding the folks that are littering my DMs right now with shallow, vapid requests to want to come up because you want to come up. That's not how this works. Okay. Anyway, continuing the conversation, SHC, pretty please jump in.
Hello?
Yeah.
Can you hear me?
Yeah, we can hear you, bud.
So I'm SHC. I'm 20 years old. I'm from Spain, and I engage with price by basically applying narrative to the chart. So I think about what makes sense to me to see in price, and then I look for the signatures in price action to basically get in the chart. And that's basically my model. And I posted a picture. I've got a question about something I posted. Can you check it out?
Sure, brother. So you just posted it recently?
28 minutes ago.
Okay, 28 minutes ago. That's good.
I think I can post it again.
I mean, it's not bad.
Can
There's
you
a lot
please
of.
Can you please, just for my sake, because it's easier
Yes.
for me. The old man's eyes aren't what they used to be.
And what?
Yes, please repost it, SHC.
Oh, okay.
I see it almost a half hour ago, but if you can put it at the top, it just makes it easy because we do have a lot of folks. Ooh, you got numbers on there. I like it. This is going to be a good question, I can tell.
Okay, wait. I had to get on my PC.
It's okay. Let us know when it.
I see it.
It's done. It's done.
I see it.
Okay, cool.
Oh, okay. So from my understanding, if we have a suspension block, on top of another suspension block, we can basically use the full range of both suspension blocks at the same time. So in the pic, you can see the Asia opening. We've got like a suspension block on top of another one, on top of another one. So my question would be that for the first percentage fair value gap, would we use the big displacements, or could we use the whole range of the suspension blocks? Do you get what I'm saying?
Okay, your number one area, that's not a suspension block. That's just a buy-side
Yeah,
balance outside
that's
efficiency.
yeah.
Just a volume imbalance at the low. Suspension block has to have above and below as part of it. But now, with that said, what is it that you're asking about?
Like, for example, if we have a first percentage fair value gap and it's a suspension block, and below we have another suspension block, could we be looking at the whole range that both suspension blocks like form? Or should we be looking at just the obvious displacement, for example?
What you can do is go back, you can go up one time frame. So I can't tell what this chart time frame is. Could you tell me what it is?
The 1 minute.
Okay, so you could go like to a 2 minute, and it'll clean up all those broken pieces that you have highlighted as 1 and 2. It can, in a 1 minute perspective, it looks like it's too broken. But if you do it as a 2 minute or 3 minute, it may give you a better, cleaner inefficiency to work with. So it kind of like helps you consecutive where there's volume imbalances. One of the things you can do is go up one magnification in time frame. It'll resolve a lot of that stuff. You want to make it as clean as you possibly can to one inefficiency. When you get that, when you get a consequent encroachment of that one specific range of inefficiency, it's going to serve you better than trying to worry about whether this one here, one or two, and what do you got to do with it. Just go up one time frame, and it'll blend those two into one single candle.
Oh, okay, yeah. I didn't think about it, but I had a bit of difficulties like using what I just posted. So thank you.
You're
I've
very
got
welcome.
another question.
Sure.
Can I go?
Absolutely.
Okay. For opening prices, I've seen that apart from the 9:30 opening price and the 4:14 opening price, we tend to use opening prices from previous days, like a 6 a.m. opening price or a midnight opening price or 8:30 opening price.
What
The
was the
days
price?
after.
What was the price you said after 9:30?
No, I mean apart from 9:30 and 4:14 as prices, not were opening prices, not 4:14, but just listen to my question, because I'm getting mixed up. What I'm basically asking is how long should we extend opening prices on our charts? Like for example, the 6 a.m. opening price.
You there, Michael?
Oh, is that all? Is that all this guy?
Yeah.
Yeah, I mean, is it part of the like 20-day look back? Like, should we have it on the chart for like 20, 40, 60 days?
Sure. Because if it's relevant, what you're doing is you're going to cycle through the last 20 days and you're going to look for all the salient PD arrays that your model identifies. You're not trying to do every possible scenario. It's not a kitchen sink approach. And that doesn't mean that you're going to have a model that gets every win, every price run. But you have to limit your focus to a very specific criteria. So yes, you're going to go back 20 days, and everything that you would utilize within your model and what PD array that you like to use or implement, you're going to look for all of them. And you're going to get the highest high and the lowest low of all those PD arrays. And that is your matrix. And if you're in the upper half of that and you're bearish, you have high probabilities that the market's going to go lower. And you start seeking the easiest low hanging fruit sell side objective. And it's just a matter of determining what those PD arrays that you're going to attribute to as part of your model. Not everybody uses a breaker. Not everybody uses every individual opening price. So some people don't even consider the 6 p.m. Eastern time opening price. I don't know why they wouldn't, but some people don't. Some people don't even use the midnight Eastern time opening. They just use 9:30 Eastern. That's their opening price. Well, that's their model. And if they're viewing price action through that lens, that perspective, and it's important to them in their model, nobody can say otherwise. So yes, 20 days, 40 days, and 60 days look back. But you can't do wrong if you're going back the last 5 days. Okay, the last 5 days, you're so close to market pricing, chances are you're going to catch a tiger by the tail if you just focus there. But there's a whole lot of other insight that you won't have unless you go back the last 4 weeks, which is the last 20 days look back. Was that helpful to you?
Yeah. So if I understand correctly, I could do something like look at the midnight opening price for the past 5 days or past 20 days and get the lowest midnight opening price to the highest extreme and grade them. I could do something like that.
Exactly.
Okay. Thank you.
That's a good question, young man. I like that. That was good. I mean, you worked through it. That was good. I mean, that was good. I like that. I liked how
My
you.
bad.
I like how
It
you
was.
had discovery there at the end within those questions. Pardon me, Michael?
Yeah, I mean, it is the language barrier a bit. So.
No, it's good, bro. It's great. It's great, and we understand the language barrier as well, wholeheartedly. So,
Okay.
yeah. Hey, good job, man. Good job.
Thank you.
Tyler, you're up next, bud.
Hey, what's going on, guys? Can you hear me?
Yes, sir.
Hey, it's protocol real quick. I am 28. I live in Lancaster, Pennsylvania. I trade, at least try to trade smart money reversals, then layer in at the 2022 model. I just had a question on timing. I know you talk about a lot about, macros, kill zones, and I was watching what was the one? The most recent video you just posted, and I was just checking out like the framework and stuff, and there was no like buy side run for you to short that, and I was just kind of thinking about like how you kind of knew it wasn't going to take out that high, because there was also no SMT with ES or even YM for that matter, and just kind of the confidence to short. It was basically like a 90% retracement back to the high of, I guess it was pre-market, if I remember, but and then taking it lower from there. Where the timing come in on that, or what preempted you to take that sell and have confidence that it was going to go lower from there?
Are you referring to the one where I showed both the US 100 CFD and the micro NASDAQ, where I showed both of them? Okay.
Yep.
I covered it this morning in the live stream. That was the first couple minutes of what I did in today's live stream. I explained how it was part of the large opening range gap, and the fact that it went up into the 25% or lower quadrant and started having difficulty going any higher. So those types of things, those events, I actually mentioned it during this trader roundup too as another response to another student. Those factors are helpful to me when there's a large gap. And that's like the trigger mechanism for me to trust gap and go. So wherever the gap is in the direction, if the gap's down lower, if it only trades up to 25% and fails to make a run above that, and it falls below it and trades back to that 25%, I'm going to take that as a short if it's a gap down. I'll take that 90% of the time. Of 100 trades, 90% of the time, I'm taking that short.
Gosh, yeah, I was looking for the mid gap, but yeah, the timing on that as well was pretty neat too. So I was just kind of wondering about that as well. So I mean, obviously it's time and price, but yeah, I mean, definitely looking for that buy side run first, and then taking it lower. But yeah, taking it from there. I mean, it makes sense when you have a big gap like that, and yeah, no, I appreciate it.
Thanks, Tyler. Keeping it going. Nas Daddy, you're up.
Hello?
Yes, sir.
Hey, okay, so protocol real quick. I'm 28. I've been trading for 9 years, 5 years trading retail, harmonics and stuff, 4.5 with ICT. Just wanted to give some feedback on today's stream. I was just thinking last night about if I stop trading, this is actually going to produce more profitability because I'm not in here trying to force setups or anything like that. And in today's stream, I mean, it's FOMC, so it's kind of expected. You know, I decided to tune in because I'm not trading. And he's talking about, talking about price and how it's not really high probability, so much back and forth. And I was just observing and really taking in the lesson. And I just appreciated, a lot of the lessons he's like, Michael, that you're putting in on the streams. I don't really have a question, but just because I find myself just listening more and taking in those lessons, and more nowadays, I find myself hearing and really paying more attention to the things Michael says in the streams. I trade market maker models, and I primarily use like swing. I've been seeing a lot
Say
of
that last part again. I heard swing, but I didn't hear anything after that.
swing highs and swing lows for my entries, and I match them up with the fair value gaps. And those are the ones that are, for me, more high probability more often than not. And I also, like, I've developed a routine where I'm present at 9:30 open, see what it does. I kind of watch it for a little bit, get off the charts, and then come back at the macro time. Because I've noticed that anytime between those first 30 minutes, usually I can be profitable. I can make predict a move, but those clean runs do happen at those macro times. And I've been doing, working on my routine, following the same routine daily, and I've just I've I feel like I've got it down to where I can show up and know around what time not to take a trade, when I need to actually start looking for a trade, the signatures I'm looking for, which is those swing highs, and we see that fair value gap, like expansion higher, creating a fair value gap, and I get entries off of I'm 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 observing the market maker models on the 4-hour chart, the daily chart, the 1-hour chart, and seeing where we're likely to gravitate. And then I get down. My model is primarily on the 15-second chart, 1 minute chart. That's where my entries are. And today it was just obliterated. I would have not made any money today. And I'm just so grateful that I didn't do anything. And it pushes my progress forward because I'm no longer taking those unnecessary losses. And yeah, I just want to share my feedback about today's
That's a
stream.
really good feedback, buddy. I love hearing that for you and your progress. It sounds like you had some
Thank
real
you.
constructive steps, and you were very topical with your conversation. So thank you. I thought that was great.
Yeah, thank you.
I appreciate the feedback too. I mean, it's nice to hear different stages of development amongst the varying degrees of how much time they've been investing into this and themselves learning it, and then hearing how you get these plateaus and achievements of understanding and your progression towards being a better analyst. Once you're a good analyst, that's a requirement before you're a good trader, and you're well on your way to get to that. Your observations, the things you're looking for, the discipline to step away and go back in with a very specific time-based focus around the macro. That's awesome. If you look at the price run today, when I was looking at those wicks, I said I'm watching the consequent encroachment of that premium wick, which would act
Mhm.
as a discount wick. Well, at 10:08, or as my wife would say, 8 minutes after 10, that's during the macro, and that was the low of the run, and we saw our run to those relative equal highs. So something like that sounds like it would fit really good with you, because what I was outlining was a market maker buy model today. If you haven't picked up on what was being discussed and what we were looking at,
Yes, I was only
we were
looking for buys.
there. You go. So it sounds like you're well on your way, man. I'm glad to hear it.
Yeah, thank you. I do see like I'm on my way, and a lot of the stuff, like, I've just simplified it. I used to try to use all the PD arrays, and I don't know, this year I just started using swing highs and swing lows and focusing on that. And I mean, it could be different stages. Like, I could be using a breaker or a market structure shift swing low, um, but it's just when I simplified it to that and just fair value gaps, it's just really pushed me forward to, and also the discipline.
You just need one paintbrush. Start putting paint on the canvas every day, and you'll get better at it.
For sure. Well, thank you so much.
Thank you
That
for
dis-
sharing, brother. Thank you.
that discipline and simplicity, it's so underrated. If too many folks want to be masters at the entire compendium, and they think that the more that they know, that somehow that makes them a better trader. When you just want to simplify a model, you want to do 10,000 kicks, you want as much data as possible that you can come to the market and anticipate what is going to happen based on the collection of data that you have collected. When you do those things, inevitably you will find success. And the problem is, folks don't follow the procedure. They don't follow the plan. They think they're smarter than the architecture, than the blueprint, than the plan. And, Michael's trying to come up here lovingly and show you guys, hey, There's a schematic. There's a way in which you can go about it. There's rules. There's signatures. There's things that we look for. And when you provide, I love how he mentioned today the if-then logic statements. And it really takes traders to understand what coding is in computer science. I mean, you've said that so much, Michael, in previous conversations throughout your compendium, really, within a lot of the rants and whatnot. Just the if-then statement, you said it again today. And I just want the trader to understand that does not have that logic tree. If this happens, then that happens. If this doesn't happen, then this might happen or could happen. Or there's there's a probability if this doesn't happen, then this might happen. And then all of those if then statements, they really, 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 really bode well for you, the trader, to be applying that logic. And on days like today, you need to focus, do things in demo. I'm so sick and tired of seeing social media, people that don't even trade live funds. They're in fucking, you guys are trading sim evaluations accounts and you're bashing other traders for trading fucking paper. It's the most asinine thing I've ever seen within the community. And I'm going to be a guy that'd be like, yep, took that trade in paper. You got a problem with that? Oh, that means I don't know how to trade? Really? Oh, really? Because I took a trade in paper, it means I don't know how to trade? Or when you do the whole thing live, you record yourself, you show the logic, what you're looking for, what you're anticipating, you're going to see. I mean, I did a little recording. It was an hour and 5 minutes over Michael's stream today, in which I took paper trades. They were paper. They were done in paper, and they were done as a laboratory because I wouldn't trade or exercise live capital over this price action based on my own rules. But go back and watch. I invite you to look, engage with price and paper where it can never hurt you, in a demo, in a laboratory, and utilize these concepts and prove to yourself that you know how to make this work. Tommy, you're up next.
What's up, guys? How you doing?
Fantastic.
Perfect. So, protocol, my name's Tommy. I'm 26 years old from Ohio. I've been trading 6 years, ICT for about 4. The way I engage with price is I use market maker models for framework, but I'm really just looking for equal highs, equal lows, and then trading the fair value gaps or order blocks that overlap gradient levels within a time-based range. And just got to say, like, some feedback on the 2026 mentorship is like gradients have just absolutely changed my life, and just so grateful for you teaching them. Within the last few months, I've made over half my annual salary at my 9-to-5 job, and it's not through like boom or bust cycles of just giant payouts or things like that. It's just been using a couple micros across linked accounts and just taking kind of small, consistent payouts throughout the year. So I'm very proud of that. But one thing that I wanted to ask is there's been times throughout the 2026 mentorship where you've mentioned in a price run where you say, okay, within the next 2 candles, I need to see it start to run and hit this high for us to be confident. Something along those lines. And I was wondering if that has to do with after we see, like, for instance, in a situation where we're holding a BISI where we want to see it propel price higher. Is it something, are you saying in the next 2 candles because it's kind of like related to times where you use like a time-based stop or something like that? Or is it because now that we've seen us hold the midpoint, we need to see price start to show us signs of moving higher? And why is it within the next 2 candles?
Both are correct. Both could be the catalyst. Many times it's both of them doing that very thing, presenting the catalyst that it's spending too much time. There's enough candles inside this specific area of my focus. So if it's going to run, it needs to do it now. And part of the back testing, part of the collection of information is when you look at the day on a 1-minute chart, every single day, you want to look at how many times a candlestick got the chance to exist inside of a fair value gap. And by default, you'll see the ones that really propel price, sending them higher or lower in deference to the direction you had. They don't spend a lot of time in there. Or if they're spending time in there, as long as those candles are respecting the discount sensitivity or premium sensitivity relative to where you think it's going to go, as long as that criteria is being met, that's okay. But like, I don't want to see like 7 candles in there doing that. It's too many.
Yeah.
So about five handles, five candles inside of a PD array. But as long as the qualifications of, proving its discount sensitivity or premium sensitivity is valid still, once I get around 5 candles, it's like, okay, we're wearing on our welcome now. It needs to start running. So it's not like some esoteric time-based idea. It's just, it's spending too much time here. It needs to get going. Shit or get off the pot. So it's as simple as that.
Okay, I got you. Appreciate that. And then another thing that I wanted to ask about, within one of the last few trader roundups, you kind of talked about whenever we have a cluster, and this is referring to gradients because it literally makes up like 90% of my trading now, it feels like, which is great. But whenever we have like a cluster of gradient levels we're using, whether it's like opening range gaps and uh, higher time frame wicks and new day opening gaps, new week opening gaps, etc. Whenever we have a cluster of those, to clean up the charts, we can just use the very bottom of that range and the very top and grade that. And so what I did today is, since we were trading within a bunch of clusters that I noticed on my one screen, I did that very thing that you mentioned of using the highest high and the lowest low within that range. And on my other screen just had all of the gradient levels that I would normally have using all of those ranges. Whenever you're doing that, where you're using the highest high and the lowest low, is that an instance, since the gradient levels are going to be a little bit farther away from each other now? I used eighths today with that idea because it was my first time looking at it like this. I noticed less setups, but those levels are very
Clean,
salient to price. Yeah,
very
yeah, yeah.
clean, very responsive. Yes.
So since they're farther apart and there's less on the chart, is that going to be an instance where you use the 16ths now?
Ken,
Okay. Alrighty. Yeah, thank you. I appreciate that.
you're
And
very welcome.
I know if you're like what I mentioned earlier about um, making the money, I don't want to just say like I made it, but what I've been able to do with it was, my fiance is going through nursing school right now and she's kind of struggling with money. So what I've been able to do that I would not have been able to do if I was just working my job is help support her and help support us even more. So that's
Praise
just
God. That's awesome. Thank you for sharing that.
yeah, yeah. Thank you. So appreciate it, guys.
Good for you, Tommy. I love hearing that, brother. Good for you. That's a really, really good story. I love hearing that for you, man. Way to provide. Way to provide, way to support.
Thanks, guys.
Great work. Really love hearing that. Couple more. We got Levi coming up here.
It really is a wonderful, humbling. I just want you guys to know how much it means to me when I get to hear what you guys are doing with it. And I just want to give thanks to the Father for allowing me to be the conduit for this, because I get such a blessing hearing how other people are taking this information and making it beneficial to others. But don't just stop at your family members. Find a way to do it with people you don't know. And I promise you, you have no idea the type of blessings that come in like a flood.
And if only the community knew how we embody that. We embody that here, Trader Roundup. I mean, we rise by lifting others. That's a very important community concept, a mastermind. That energy, I mean, we get that from Michael. We rise by lifting others. You get more by helping other people. And in this trading game, this space, it's a really good opportunity to share your story, how you're utilizing these things in your hand. And then if and when you can, try and help someone else. That's really the energy. That's what it's all about. So lovely to hear, Tommy. Really nice to hear. Levi, you're up next, bud. Levi, Levy.
Oh, 1 second, Kit. You can just keep going.
All right, I got you.
Sorry.
No problem. You're all good. I appreciate that. This is Tim Butler. Tim Butler, you there, buddy?
Yes, sir. I'm here.
How's it going, Tim Butler? How you doing?
What's up? I'm doing well. Get straight to it. I'm Tim Butler. I was so excited yesterday. I was just excited. But I'm gonna get to the chase. I'm Tim Butler. I've been trading ICT since 2023. I've been with him since 2023. The first time I got in contact with ICT was he was on a Twitter live stream on Iran, and I was like, man, this guy's confident. So I followed him. But long story short, cutting to today, I sent in the chat what I seen today and also what I seen yesterday. So ICT, I engage with price like my ultimate engage. My bread and butter is daily like quadrants. So if it's a wick or gap, I use that. And which like my original was fair value gaps that lay over that. But I've been seeing in the current market condition wicks that I'm like, man, these are insane wicks. Like I've been trading since 2020 and 2022, 2023. Those were different market conditions, and I've never seen it on this level. So I've been using wicks lately. And my first question will be, when using wicks that lay over the daily quadrants, whether I'm using fair value gap or a wick or order block, what if, and I know you spoke about this earlier about hybrid P arrays. And so if I see a couple of, let's say I'm using the 1 minute, I'm seeing a couple of wicks on the daily quadrant level. Would it be like you were saying a couple of talks like this? I would just take the extreme high and extreme lows of the wicks, um, and grade. And let's say if I want to see buying pressure, or I want to see buying what's going up, staying above it.
Did you just say
Could I
buying?
use? I almost said it. I almost said a saying. I caught myself. I was like, no, don't say it. And I started out trading with trend lines, so just forgive me, man. Forgive
That's
me. I'm trying to break my
hilarious.
programming. But that's actually insane. But
Then you
so like I
apologize. That's even funnier. Like, oh, my bad.
because ICT has been telling me for the past not like 3 years we don't believe in that crap.
Yeah.
And it's hard, switching
Well,
over.
dude, you got to
And
understand. I was hanging out with Santa Claus the other day, and the Easter Bunny came, and holy shit.
But yeah, man, could I use like the extreme high and the lows of the wicks that lay over? And my second question would be the question that touched my heart the most. And this has been something that I've been kind of struggling with because I typically love to use fair value gaps. Is let's just say I'm using a fair value gap that lays over the daily, quadrant level, or let's just say I'm using a wick. I haven't gotten to the order block area because it kind of gets a little tricky for me. But let's just say I'm using a fair value gap, and I see the market. The bodies. And one thing you always said, always stuck with me: bodies tell the story, wicks do the damage, and that's kind of been kind of telling of this time we've been in lately. So my problem is, I'll see bodies. Like let's say I'm looking for price to go up. I'm seeing bodies lay down where they're not supposed to be, they're supposed to staying, let's say we want to see up, and I want to see the body stay above encroachment. So there'll be times when the market have the bodies close below that, and then let's just say we hit a macro, or let's just say we haven't hit a macro, and then all of a sudden the encroachment becomes sensitive, and I've just got stopped out because I've seen one or two candles show sensitivity. And I know previously you talked about, fair value gap being balanced when it goes in it and then goes away and then goes back in it. And I'm like, man, how do I kind of deal with those two things? Or those are my only two questions.
That was a lot. Did you get that,
Yeah,
Michael?
I'm trying to decipher the separations between the two.
Yeah.
I don't really understand when you say, can you lay, like, I don't know what wicks you're talking about when you say the wicks that you're wanting to use the highest high and the lowest low of. Because at first I thought you were talking about my gray pool, but then I lost the tracking of what you were going with. And in the last, I'm not really
I
certain.
have Michael. I sent pictures in the chat to
Did you
kind of give
send
a
it
better
again?
idea. Yes,
Repost
sir.
it.
I
I'll
sent it
look for it.
again.
Let me see.
Well, that's definitely part of it, bro, because neither one of us were looking in the chat. And I think we both got a little lost there. So,
I love the energy. I just I wasn't able to pull out what the question was.
yeah, no, yes.
I'm sorry, man. I'm sorry. It should be currently up there. I just reposted it again 2 seconds ago, and this was actually today's move. I actually been seeing so many moves that kind of line up with this, and it's
Okay, so now
Ooh.
I'm looking at the chart to the left where you have the beginning of the
the
run up.
purple is the daily fair value gap, and then the red is the wicks that lay over. Like the wicks have to lay over the quadrant level. It can't be, kind of has to lay over. Like if I was using the fair value gap, and I've kind of like took in the extreme of the wicks that lay over that quadrant.
Okay, well, tell me which one of those wicks you're anchored to for the highest high.
So what I've been using is the wick. So there's a couple of wicks that lay over that quadrant level, and with I'm because that's one of the problems I used to deal with is which wick do I use, and I would see multiple wicks lay over the quadrant level, and I'm like, man, which one's the best one? And then I back tested, because I like experimenting with things, and I was like, man, what if I just use the range of the wicks that just lay over?
Mm-hmm.
Because some candles, the body goes over the quadrant level and the wicks are outside, but there's some wicks that lay on top of the quadrant level that I like to anchor, and I just wanted your feedback on that.
Well, if when you're able to do so, look at the 47-minute after 9. So 9:47
Yes, sir.
Eastern time this morning. That wick is the one I actually highlight during the live stream. And the reason
Mm-hmm.
why I picked that one, this is going to be the basis for how you pick the wicks to choose from. When we were running higher after 9:47, and it created that little short-term high formed at 9:56 Eastern time. That retracement back down, there was really no gap in there to work with that was useful. So I elected to use the 947 wick because it was the largest, tallest one prior to that price run that took out the high of 942. So we're seeing a market structure shift there. It rallied higher, and then pulling back down into that, the bodies were not even touching the consequent encroachment of 947's candle. The fact that it didn't
Yeah.
do that, it was indicating, as I mentioned, that that's a signature or a telltale sign that Phil's probably going to run this thing higher. And there it went. So you're
Okay.
looking for the wick, the tallest wick that price ran above when you're bullish.
Mm-hmm.
It'll use constant encroachment of that. So I don't think it's necessary for you to be like looking for layering over top of multiple wicks and the highest high and lows. I don't personally do anything like that. But what you watch
Mm-hmm.
me do here and what I've taught in other instances, that's all I do with the wicks. I don't really go beyond that.
Okay.
If you find
So
something and it's neat and you see something working, by all means, if you're feeling like you want to share it, then please. But I personally, I just don't do anything like that.
I got you. And my last question would be like, let's just say I have like this, or I kind of said it, but I'm sorry. Like I want to see upper prices, but let's just say the bodies aren't being sensitive. Let's say we want to see price go up. The bodies aren't being sensitive above it, and bodies keep going below it, and then staying kind of in that range, and then out of nowhere it just becomes sensitive, and then it moves. Like, is there a way to like kind of navigate through that, or that's just kind of a time where I just need to sit on my hands?
Okay, just for my sake, because I'm an older dude now, let's assume that we're
Yes, sir.
watching a SIBI. So it's a sell side
Yes, sir.
imbalance, buy side inefficiency. We expect the prices to go higher. The consequent encroachment level has been breached. We traded outside of it on the upside, and now we're coming back down in. But instead of staying in the upper half where premium sensitivity is showing, and we want to see it discount sensitivity. Oh, I said that wrong. I apologize. I said that wrong. Where the bodies are staying in the upper half, which is what we want to see. We don't want to see them in the lower half if we're expecting it to be bullish. So we're seeing discount sensitivity. If it's doing the opposite and you're wanting to see it go higher, but the bodies are staying in the lower half, but then it transitions to then now shooting to show only in the upper portion is the body's being permitted and it's not going in the lower. Is that something transitional?
Okay.
No, I'm asking, is that what you're asking me?
Yeah.
Okay.
I'm asking, what would I do in that situation if I'm not seeing it line up with the upper, upper.
In that instance, I would wait for it to create a run outside of it and then take the first fair value gap or the first down close candle as an order block to get into that, because it would need to shake off that indecisiveness, because it's either going to deliver perfectly with the order flow concept I'm teaching or it's not. And it's great to identify when it's not, because it makes it easy for you to say, I'm not going to touch it yet.
Yeah.
Make sense?
Yes, sir.
That
makes sense.
If you demand the highest degree of confirmation based on what we're looking for, if it's bullish, it's going to stay out of the lower half. Okay? If it's bearish, it's going to stay out of the upper half. And if you stick to that, I promise you, a lot of the uncertainty or the sloppy trades or the ones that tend to spend too much time before running in your favor, even if they do, that gets kind of it brooms it away, and you get less of that type of thing happening in your trades.
Okay. All right then. Yeah, that's all I had. Thank you.
You're very
Thank
welcome.
you a lot.
Good question, brother.
Order flow, discount sensitivity for premium price, for the seeking of premium price, order flow, premium sensitivity for the continuation of lower pricing. I said that right. I just want to make sure. I'm saying it out loud because I want to make sure I'm saying it right. So the cohesive thought is the upper half, the upper quarter is discount sensitivity because we want it to seek higher pricing. So I'm saying it out loud for myself, and I heard Michael say it, so I'm also saying it for everyone else. So that's what it is. Discount sensitivity for higher pricing, premium sensitivity for lower pricing, right? Makes sense. It's intuitive, but it's good to kind of walk through. Tim Butler, are you good, bro? You got anything else?
Yeah, that's all I had.
Great questions, bro.
Yeah, that's all I had, man. Appreciate it, Mike.
Well, I'm Kitt, but it's all good.
Oh,
Hey,
I'm
call me
sorry,
anything
man.
but late for dinner, bro. You know what I'm saying?
I'm sorry, man. I've been up since 11. Man, I've been working since basically 24 hours. So
Right on.
I'm sorry, man.
You don't need to apologize. You can call me anything but late for dinner, and someone accidentally calling me Michael. I've been called way worse, trust me. So, S-Pill, let's bring you up next. And thanks, Tim Butler.
Hey, what's up, Kitt?
S-Pill, how you doing?
Good. What's going on, man?
Not much, buddy. How about yourself? How you doing?
I'm doing great, man. Yeah, shout out to everyone here. Great space, great. I've been listening to everyone come up and asking questions and all the answers, and appreciate Michael being here and everyone. I just had a couple things I just wanted to say real quick. So I'm not trading today. It's a personal decision. That doesn't mean that, you can't trade or you should trade or you shouldn't, whatever. I looked at it this morning and I thought, okay, we got FOMC later, we got earnings at the end of the day, we got month's end pretty much happening right now, which is a whole bunch of different scenarios happening at the same time. And I was like, what's probably going to happen? I'll probably take a couple good trades, like in the AM, like pre-market, when I'm focused and I'm following my system. And then inevitably there's going to be some crazy moves later. I'll probably get stopped out. I might take a couple losses. And today is a perfect day where I could start off doing great and like end up just absolutely trading through the FOMC, like when I shouldn't be and stuff like that. So I just said, you know what? It's always better trading the next day when you have money in your account. And that's what I'm doing. I mean, maybe like around 245, 3, I might trade one micro, but I probably won't, since earnings are happening like after. And like I said, it's month's end coming up. But I just wanted to, just that mindset is just remember that it's always better trading the next day when you have money. And that's coming from experience. And another thing I wanted to say to the audience real quick, and I'm speaking to the folks that have been passing evals, getting payouts and stuff like that. And passing evals or maybe, blowing it at the funded stage, whatever. I think if you're passing evals, you should be at least allocating a little bit of your capital towards building up a personal account. And I know we all say this and we say, yeah, well, you're going to get your payouts and then, put the payout to your account, which is yes. But actually, if you just, instead of like paying for props, you put part of that towards your personal account. So you have like whatever you're spending per month, just spend less on the props and spend more on yourself, because I think this, if you can pass evals, you're already a better trader than you think you are. Obviously, we need a lot of time and consistency and stuff like that, but it's a lot easier trading your own account, a lot. The props,
I mean, they add a layer of difficulty, right? I mean, there's just
they're
more
not
rules.
designed
Right.
designed to
Pay you.
pay you out. They're just not. So it's a layer of a casino on a casino that you're already like in, right? So we're doing something that's already very difficult. And if you really think about it, because I've gotten a lot of pushback, I've been called terrible things like on this app.
Yeah, no,
This-
I've seen that. I've seen that.
And I was just like, are you guys kidding me? Like, and I'm not saying that, don't ever use props or props are dead or whatever. I'm just saying that, well, regarding that, if you think that you're going to make $25,000 in 1 week on props because you can like, spend $1,000 and get all these accounts, right there, that mindset, that's the scratchy mindset. Like you're looking to win like a scratchy 25 grand. You're not looking to be a trader over long-term, like realistic approach. And that came from like, if I had $1,000, I would put it in my own account versus buying props.
That's good. That's good insight. I like that.
Well, I mean, the reason is, yeah, you could do it. Of course you could do it. I mean, anyone could do it, but are you gonna keep doing it? Because this is what happens with props.
Bro, I got people in here. They're like, "What's the question? Time is precious."
Oh,
Folks,
they
yeah,
wanna
I mean,
talk.
this is
Okay,
not a
all right.
tradition. No, it's just not a traditional space. So we're here. It's just not a traditional
Michael's
space.
here.
So
Okay, I got you.
yeah.
Well,
So and I appreciate shooting the shit, but
no, that's cool.
everyone here is kind of like.
He can comment on the personal account versus prop. Last point about that is because remember, after all that stuff and going through all the rules and how difficult they make it, then you can also only withdraw half of it, right? I mean, like on your personal account, man, you could take a little bit out at the end of the week if you need to. You don't need to like be going for these crazy payouts. But that was it. It was more of like just a positive vibe to send to everybody. I think you can do it. I think you're probably better traders than like maybe you think you are, especially if you're already passing all these evals and stuff like that. And I'll let everyone else come on. Kitt, thanks so much for letting me just hop on real quick. Love you guys.
My boy S Pill coming in, trying to add value. So I value and appreciate the dad energy, trying to bring value. It's kind of funny. I look at all the comments. Folks are like angry because they're like, "Well, I got a question. Bring me up instead. How are you gonna let that guy talk? He's not even talking." It's pretty funny. My DMs right now are hilarious. Folks' heads literally popping off. But we got just a few more minutes. Jaquan with the last question. I know he's been up. He's had a good question. So looking for a good question to wrap things up. Jaquan, you're up. Jaquan, I'm sorry. It's not Jaquan, it's Jaquan. My bad.
Jaquan,
You're talking to a muted mic, mate.
Jaquan.
Oh, look at my boy. Live trading is where Hey, where'd Jared go? We got just a few more minutes, guys. We're trying to move here. Denny, you're up next. One more time. My boy Jared in the house saying, "What's up?" You there, Denny? Jump in here.
Hello, can you guys hear
Yes,
me?
sir. We can hear you.
I'm 18. I've been trading ICT for 2 years, and my model is ICT's Reaper. And I came up here just to ask a question about a Reaper. Could we get a little bit more insight? Because there's like not much videos about it, and I have been experimenting and back testing with things that ICT has given on his breaker, and I just couple that thing with the Reaper and been like, okay, maybe the gap inside of the breaker and all the insight is given on the breaker, it's probably, the same thing, but I just want to hear the one say it. The ICT, can he just say some insight on it?
Did you get what he said, Michael?
No, actually, I
Yeah, I
didn't.
didn't really. I heard him kind of mumbling at the end, something about Reaper and like Reaper, Reaper.
Is my mic all right?
It is. I would make it a point of enunciating your words.
I'm sorry. So my question is, can we get a little bit more insight on the Reaper?
You will, but it won't be in this space.
Because there's only a couple of videos going through 2023 and then one video in 2024, as I remember. And I would love to hear a little bit more about it because it really, really resonated with me. The model, the balanced price range, taking out the stops, discount gap, and extending it out and just really just ripping right through everything and then getting right back to the brass tacks with the gap. And I would love just a little, hints because I have been experimenting with it, coupling things that you have already said, and then just, blending things together. I would love to hear something more about it if it's all right.
And Denny, I think he's saying tune into his YouTube channel because that's where it's at, right? That's where it's going to be at.
I have an outline of lectures I'll be doing before we come to the close before the holidays, Lord willing, obviously. I mean, if he takes me home, it is what it is. But up until the week before Thanksgiving, I have an outline of certain lectures I want to cover. There's a couple little mini series of things I want to cover that were joined together in lectures that will go a week long. There's 3 of them. But I have topical studies and some of them, and I'll release 3 more PD arrays before the close of this year's mentorship as well.
I have one more question. It's again same with the Reapers. If it's okay, if I can ask really quick.
Well, real quick, you were referencing the 2023 mentorship, ICT Reaper PD Array Introduction Market Review is in what video is it? Hold on.
It's in July's content. I've already watched that video, but I've been back testing and I found the suspension block really good. And what I found is sometimes we will have a discount gap where it's wicks overlapping, but then we'll have a suspension block. And I'm just asking, could that act similar way as the Reaper would? Not exactly the same, but could it have like the same characteristics as the Reaper would, where we don't have an actual fair value gap, but we have that volume imbalance up, volume imbalance down, and the
Do you
wicks
have
are
an
blockers.
example on a chart?
I do have.
Can you send it to me?
Yeah.
In the little GoPro?
Wait. Okay, where do I send the example?
In the little purple pill to the right, you just go there and you post it right there, buddy.
Yeah, sure. Let me try and find one. I'm actually unprepared for this.
That's okay. But it is good if you have a question regarding the chart, and if we do bring
wait.
you up, that you try and post a picture of the chart with your question. Okay.
Can I post this one? It hasn't really traded to it, but imagine if it did. Is that a okay thing to ask?
No, because it's you're kind of like you're predicting something around the basis of it not being there yet, and the logic that would be used for me in terms of responding
Wait, I do have one.
wouldn't be
One second.
a real good depiction. Okay, if you have a chart, wonderful. That's what I'm looking for.
I've sent it.
Nice.
So it will be something like this,
Well, hold on.
where we form
Calm
this
down. Calm
breakout.
down. Wait, Michael, do you see it?
I'm looking. Hang on one
Yeah,
second.
it's a brown chart by Denny.
Okay, I see you.
All right, Denny, go ahead, bud.
So you see how the wicks, we don't really have a reaper in that price run from the leg A to B, but there's these wicks overlapping, and I basically taken the consequent encroachments and extended them through. So it's kind of like an implied fair value gap inside of that A to B price leg. Could that be something valuable?
What do you call an A to B? Because I don't see an A to B highlighted. I see lines. I see a vertical line. I see
There's
highlighted
a,
candles.
yeah, where the two red lines are outlined. You see the high, the low, like lower
The
low, and
horizontal red lines at roughly 27,130 and 27,110, roughly.
Okay, I see it. So you're
and
highlighting the
that's,
consequent version of the down close candle, and then the
yeah,
discount wick of the
yeah.
second up close candle.
So it will be basically like an implied gap, what you've been teaching, where it will act just like a fair value gap. So it's like a breaker, and then we don't have an actual gap in discount, but we have an implied gap in discount. Could that act like a somewhat reaper? I've been talking to one of your charter members, and it's kind of like not a hidden PD array, but maybe a little bit of a hidden narrative.
I wouldn't anchor to those candlesticks. I wouldn't do anything with those specific wicks like you're doing here, but I would do it with the wick with the most down close. Look at your swing low that's highlighted with that little pink area where the candles are highlighted with a little pink box. Just to the left of that, you have your most lowest down close candle. The
Yes.
closing candle of that, okay? If you look at that candlestick right to the right of it, that consequent encroachment of that down close candle is the up candle, the lowest one. That one, and then the very next one where you have highlighted, I guess it's a pink box. Those two, I would have those highlighted, and that would have been useful for the last portion, right before it leaves that little pink area. That's something I would have highlighted, but I don't see any benefit to doing what you're showing here. And I'm not saying that it's not good. You might discover something. I just don't
Yeah.
personally apply it.
Oh, no, it's just like a lot of back testing, and it's something that like just you see a repeat over and over, and I guess it just resonated with me. I cannot find the suspension block one, but this is also like a similar example. So some suspension block would be like the same, like here, literally the same exact idea, but I guess it's not something you would be looking for. But I am looking forward to those Reaper PDRA lectures, and thank you
If
very
you look
much.
at the down close candle, right at the, it looks like you have a shaded gray, I'm sorry, green box area.
Yeah.
It's the longest down close candle with the longest down or discount wick that crosses down through your two little red dotted lines. That fair value gap there that has what looks like it's a suspension block. I'm not a suspension block, a volume imbalance at the low of it. That gap, if you extend that over, you'll see what it's utilizing with the little return back into those dotted lines you're trying to showcase there. It's actually responding to that, which is inversion.
Yeah, I do see that.
Also, go to the left of that, and you'll see that big long wick that starts the green box that you have shaded. Find the consequent encroachment of that and carry that over, and you'll see what it's not doing. And that's why
Yeah,
it's
I do
important to see that.
remember in 2023 you said that if the Reapers are above your pay grade, you could use the inversion fair value gap resonated with the breaker. So I guess that's what you're trying to outline here.
Not so much. I'm just showing you the wick, the consequent correction of a wick to the left of a fair value gap.
Yeah, I see it.
That becomes an inversion. I'll scratch your itch in regards to the Reaper, but it'll be later in the fall when I get to it, okay?
Okay.
Denny, I like how I like how he's very emphatic about trading the Reaper. So I like it.
It's just the logic around
I
it.
love
It's
it. I love
really
it for you, bro. I love it for you. It's great. I like seeing folks have that energy towards model.
Yeah, I appreciate you bringing me on here. I really appreciate that. Thank you very much.
Hey, Kit, in the future,
yes, sir.
When we have a hard extraction time, can we like start winding it down 5 minutes before? Don't give any opportunity for anyone because I don't want to be rude.
Yes, that's my fault.
Them off,
it's my fault.
But
my bad.
I'm getting looked at
All
right
right,
now.
that's my bad. I apologize. That's on me. So I take that. I apologize. With that said, everybody, let's wrap up where we're at. Hard extraction time has been met. Thank you, everybody, for being here for Trader Roundup post ICT live stream. Michael,
have a good day.
Have a great one.
Bye. Bye, everybody.